Welcome to the first Targets in Focus of the new trading week. Today we'll be looking at emerging market currency pairs Indian rupee dollar, dollar ZAR and dollar Turkish lira. Joining me now is Miles Eakers, head of FX trading at Savi Trading. Miles, the Indian rupee sank today as investors favoured the dollar on speculation US policymakers will cut its asset purchases. Now, this comes after better than expected US NFP figures on Friday. With this in mind, what are your short, mid and long-term forecasts for the Indian rupee US dollar pairing and why?
We basically expect tapering by the Fed over the coming months, I think, as long as the US data starts to improve. We are sceptical. The US data on Friday was only slightly stronger than expected. I still think we need to see slightly stronger data than we've seen so far. In terms of the market overall, we do expect further dollar strength on the back of this. We'll be looking for the Indian rupee to weaken against the dollar in the longer term.
And what do you see happening to the dollar-ZAR pairing over the short and long term, and why?
On the basis of US economic growth and as a result tapering and tightening monetary policy by the Fed, this should push the gold down in value. The dollar-ZAR has obviously got quite a strong correlation with gold as it is a net exporter of gold. We therefore think the ZAR is going to weaken against the dollar in the longer term as well, on the basis of economic growth in the US. We believe that if the economic growth in the US doesn't continue, then it's likely we'd see further monetary stimulus by the Fed, which should boost and push up the value of gold, and that is likely to push up the value of the dollar, weaken the dollar against the rand, so strengthening the rand. In terms of where we are at the moment, we do see potentially a bit of a squeeze lower, so maybe down to the 950 area. In terms of the longer term, we are eyeing 11 and then 12 as the exchange rate for the dollar against the ZAR. This mainly on the back of, US economic growth in the longer term. So in terms of an outright prediction, I'd say 11 to 12 is not a bad call for 6 to 12 months, potentially squeezing down to the 9.5 area at the moment.
Miles, how do you see the dollar-Turkish lira pairing performing over the remainder of this year, and what will be the main driver of its performance in your view?
In terms of the exchange rate between the US and the Turkish lira, we expect, again, it's all on the back of the US growth story. If the US continues to grow and we see more and more positive data coming out of America, then the idea is that the dollar should strengthen against every currency out there. If, however, data starts to disappoint, then you see further stimulus by the Fed, which in essence is going to weaken it against all currencies. If you look at Europe, and Turkish lira is very heavily linked with Europe, we see further stimulus by European member states. And as a result, we are sceptical of Turkish lira strength, as a lot of the export-driven growth or any of the trading growth that goes on in Turkey will be heavily linked to Europe, as Europe is facing quite high unemployment, low growth, and low consumer demand. We expect the Turkish lira to weaken against the dollar in the longer term as well. Yeah, so the Turkish lira, basically, we expect the dollar to strengthen over the course of the next 1 month to 12 months. In the short to medium term, we're eyeing the 2 to 220 exchange rate as being key resistance areas for a further breakup. In the longer term, we start eyeing the 283 handle as the next potential upside for the exchange rate.
Lastly, do you expect a Federal Reserve cut on asset purchase following the positive US jobs data? And if so, how do you think emerging market currencies will be affected?
We eye more growth needed before the Fed start tapering asset purchases. There's a lot of Fed members that are quite eager to start trimming back on QE, but Ben Bernanke has said it's quite clearly that he will do everything in his means to stimulate growth for however long it's needed. At the moment, we're looking at unemployment rate that's way above the market in terms of where the Fed are going to start tapering. So for us, we are looking at a 300,000 read on NFP to be a real signal that the market's about to taper. If this happens, which we expect over the next 6 to 9 months, we expect the dollar to rally aggressively. We are at some record lows of the dollar against these currencies in terms of weekly and monthly exchange rates. If you look at the Aussie dollar, it's come under considerable pressure. And we expect the emerging currency markets to follow suit, and we expect dollar strength across the board. And we think the Chinese yuan is going to strengthen against other currencies as well, as it's pegged to the dollar. So we are expecting dollar strength across the board and emerging market weakness.
That's all for now, but do check out other exclusive interviews from the TV team by clicking back. And of course, stay tuned to Dukascopy TV for the latest financial news. Goodbye for now.